Fed Chair Jerome Powell said yesterday that the U.S. Central Bank would continue to raise interest rates, but at a slower pace than previously expected. However, he gave no specific comments on this issue. Thus, the regulator's further steps remain unclear. Moreover, the head of the U.S. Central Bank does not believe that the country's economy is currently in a recession. However, macroeconomic statistics clearly indicate otherwise. So, all this contributed to a rise in oil prices. On the one hand, the slower pace of interest rate hikes reduces borrowing costs for many market participants. On the other hand, demand will hardly drop sharply, given that there is no recession. Probably today's data on the U.S. economic growth for the second quarter will somehow make things clear. If the indicator turns out to be rather upbeat, oil prices may well rise above $110 per barrel. According to the trading chart, Brent crude oil futures managed to overcome $107.50 per barrel, the upper boundary of the sideways range limited by the levels of $101.50 and $107.50. As a result, the volume of long positions increased. An uptrend will be confirmed if the price consolidates above the level of 108. And in this case, the benchmark will most likely hit for the 110 and 115 area. An alternative scenario suggests a false breakout in the event of a price return below the 105 mark. Likewise, the likelihood that the Fed could slow the pace of the interest rate increases supported gold prices. The yellow metal even exceeded $1,740 per ounce at some point. If the price consolidates above $1,740 on the forward chart, the asset is expected to continue its upward move towards the level of $1,750. Part of the reason for such a steep advance in the gold prices is the same as in the case of oil. A slower pace of rate hikes makes borrowing less expensive, while many investors use leveraged money. However, the very fact that central banks, including the ECB, will more cautious raising rates will inevitably lead to a decline in the value of gold. Nevertheless, a return to 1,700 is likely to be more gradual. Now let's consider the dynamics of the Russian currency. At a first glance, the ruble remains stable while making increasingly frequent attempts to gain value. For the time being, speculative interest persists. Thus, if the price consolidates above 61.20, it may well hit towards 65. However, yesterday the dollar exchange rate fell below the mark of 60 rubles. This indicates the market participants are running out of patience. They are no longer waiting for the Russian government to make a decision on reintroducing the country's budget rule, which will allow the finance ministry to buy foreign currency via market interventions. Thus, if the situation remains unchanged, the dollar will tumble below 60 rubles next week. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.